Hi, this is Hyperwave. I am Leah Wald here with Tyler Jenks. Starting off, this is Hoff Sauce. You know that we're always a bit goofy, which is an absolutely incredible hot sauce company based in Chattanooga, Tennessee, who just took some awards recently. Tyler, you like Hoff Sauce, and what's going on with your day?
Yeah, I love it actually. And it's a little too spicy for me, but a lot of people love that. But there's like 5 different kinds, but it's terrific, unbelievable. We wanted to talk today about Bitcoin mainly because there were so many questions before last night happened in terms of are we panicking yet? Is it time to get in? Aren't you sorry that you aren't in, and all that sort of thing? But then a lot of that quieted down this morning when we dropped close to 1,000 points, and we wanted to talk about that. It really, nothing big happened or unexpected, but it's important to get some context here. An awful lot of people are asking about how we're defining long-term, intermediate term, and short-term. I think that's confusing people. People that know we love Bitcoin and think it's going much, much higher can't understand how we can say that the long term is negative. And that's simply a problem with terminology. And I want to get into that a little bit. But then also some funny things have been happening over in the stock market land. And we need a much longer show to go into it because interest rates are doing some very interesting things, with the 10-year up at 3%. The spread between the 10-year and the 2-year has been narrowing dramatically, which have a lot of people thinking that could be signaling a recession. The NASDAQ and the Dow and the S&P had tried to get going again, and then they sputtered, just the way Bitcoin has been trying to get going off of that 6,000, 7,500 area. And a lot of people, most analysts said, here we go, hang on, strap on to the roller coaster, we're going up. A couple of us did not think that. Mainly, I don't, because of Hyperwave, because I'm convinced we're in a phase 7. But so there's an awful lot to talk about. We're not going to spend a lot of time on the stock market, but I did want to bring up some points about the NASDAQ, the 10 biggest NASDAQ stocks. We've looked at them before. So we're going to start with Bitcoin and bring everybody up to speed with our thinking of where we are. And I will do that by screen sharing just some simple Bitcoin charts. And yes, I'm going to use Bitcoin wisdom, and then we're going to turn to trading view to look at the 10 largest NASDAQ stocks. And I want to make some points about that. I thought I had made them before, but going back into some of the past vlogs, I see that I was remiss, and I want to point some things out. So what we're looking at now is Bitcoin, Bitstamp on Bitcoin Wisdom, and this is the weekly chart. The way I look at this when I take my glasses off and stand far away is there have been 2 trends on this chart, one starting at 500 going up to 20,000, and one going from 20,000 down to the bottom. Just 2 lines, one up, one down. That's the long term. And the long term I define as months. That's only in investment terms, trading terms, decision-making terms, using technical or fundamental analysis. To me, long term means months. Well, Tyler, how many months? Well, that depends. It depends on a lot of things, but we're not talking about hours or days or weeks. We're talking months. It might be 2 or 3 or 4 or 5 or 10 or 20 months. It might run into a year, but to me, that's when I use the term long term, that's what I'm talking about. Now, some assets like Bitcoin move very, very quickly, both up and down. And so long term, I still believe means months there, particularly when you've got a phase one line that lasted almost 8 years. I don't think it's unreasonable to say that what you're looking at on this chart is basically months going from the beginning of 2017 to basically still the beginning of 2018. We're looking at a 12-month chart, 14-month chart. So that's long term. Intermediate term is weeks, and short term is days. So when I say short term, it looks like we could have a bounce up to the $9,200 area on Bitcoin. That's what I meant. I meant, you know, it could run from where it was at 8,000, and it could run up as high as 9,200. That's not a call for 10,000 or 15,000 or 20,000 or 50,000. It just means on a short-term basis, the technicals are lined up for some kind of a bounce. And the intermediate term is weeks, you know, 2, 3, 4, 5 weeks. This is a weekly chart. So from the very bottom here at 5,900, we've basically gone about 10, 11, 12 weeks. That's an intermediate term trend. And that intermediate term trend is sideways. It's not going anywhere. Even with the action of this daily stuff we've seen recently. And even though almost 2 months have gone by, basically we've gone from over here to over here. It hasn't moved. It's gone sideways. The monthly long term is down, still going down. The daily has been going up, and the weekly has been flat. And I believe that the weekly or the intermediate term and the long term is going down. The intermediate term will continue lower, and that will take the long term lower until things are satisfied down here somewhere. That's just a working proposition based on Hyperwave and a number of other things. But just so everybody understands the terminology, when I say long term, that doesn't mean I don't think Bitcoin is not going much, much higher, but it might be a year, it might be 2 years, it might be 3 years. Definitely on a monthly basis, I don't think we're anywhere near turning around. Okay, so I wanted to quickly go through my thinking here, and we're going to go to a shorter time frame to do that, the dailies. This is what the daily chart has done off of the bottom, this consolidation period with a very big spike up, another consolidation period, another big spike up, another consolidation period, and a big spike up. And it took us basically from the lows at 6,500 all the way over 9,500. That's a big move. That's a 50% move. That's great. That's great. Somewhere during this consolidation, I said I thought we could get up to 9,200 on a short-term basis, meaning a daily basis. And then for the next 1, 2, 3, 4, 5, 6, 7 days, it went up, and now it's struggling. So in our title, I basically implied with a question mark that now we're at a very important crossroads. And you can see that crossroads when you get even smaller. So let's just take a look at the 4-hour chart. Now, the 4-hour chart shows that basically what we've done through this long consolidation that then ran up for 6 days, or excuse me, that then ran up this 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, let's call it 4-hour periods, or about a day and a half. We gave it all back, and most of it came in 2 30-minute periods. When you look at the 30-minute chart, it dropped very sharply after hitting 97.55, went sideways, another sharp drop, went sideways, another sharp drop, and now it's been going sideways to up a little bit, 9,096 last. Okay, going back to the weekly chart, because everything I do starts with the longer periods and then gets into the intermediate periods and then the shorter periods. Okay, so let's take a quick look at the Fibonacci's. These are the Fibonacci lines from back with 500 at the bottom all the way up to the top at 9,666. We've been saying for the last several days that I considered the Fibonacci's neutral because we were trapped halfway in between the 50% and the 61.8% retracement off of this big run up. And it's still that way. So nothing has changed in the past week, 2 weeks, since we first broke up through the 61.8 and then climbed all the way last night before the sell-off, pretty close to the next level, which was 50%. But it didn't work, and we've dropped sharply from that. It's still neutral. It could go either way from here. So the first thing I look at on a big chart is where are we in terms of the golden mean and being between strength and resistance areas. And I would give this chart a neutral just simply based on that. Okay, so now let's pull up a couple of other things. Let's start with moving averages, and what we're looking at are the two that I use on a weekly chart, which is a 7 and a 30. Now, why a 7 and a 30? Because basically that translates into a 50-day and 200-day moving average. Not exactly, but it's close enough, and I like those two numbers, so that's what I use. And we've shown this before. This is clearly negative because we've had the death cross with the short term cutting through the long term. The long term is still going up, but we're below it. And the short term is getting further and further away from it. So to me, that is a negative. Now, when a long-term moving average is broken to the downside, that is not a sell signal to me. Just talking about consensio and moving averages. If the long-term moving average is moving up, which this one is. So the fact that it was penetrated here didn't bother me, and it closed above it. The fact that it was penetrated here and closed above it was fine. This one was a little more problematic because we closed below it on a weekly basis, but the line was still going up. That is not a sell signal. But what's happened for the last 6 weeks is we've stayed below it and allowed the short-term moving average to come down through it. But now, the last 2 weeks, we've gone above the short-term moving average, which slowly will turn that. So this is a very important point right now on a weekly chart between these two moving averages. I would consider it negative because of the cross. I would consider it neutral if that cross hadn't taken place and we were above the short-term moving average, struggling to get back above the large. But we have not done that. Notice that last night we touched it, touched the long-term, in this case, a 30-week moving average, but got rejected down very sharply, and we are in a short-term downtrend. That's important. I said before that we could have a short-term uptrend up to 9,200. It overshot it up to 97, but quickly returned below 9,200, struggled at around 9,200, and then fell apart. So not knowing what the timing is on this chart, that it's only a 30-minute chart, just like I did on the first chart, I only see two lines here. I see an uptrend and I see a downtrend. We are in the downtrend. And yes, it is true that it's flattening out and going up a little bit, but it hasn't shown anything to say that the downtrend is over. So back to the weekly, that's why I'm interpreting this chart as negative because of the death cross and neutral to negative because we're stuck in between these two weekly candles being between the two moving averages and we are in a short-term downtrend. We need to be in a short-term uptrend again to keep this shorter-term moving average from going down further. Because the further it gets away from the long-term moving average, it will then turn the long-term moving average down, and then all kinds of bad things will happen very quickly. Okay, so those are the first two things I wanted to look at. Now we're going to take a look at the Bollinger Bands, and this is clearly negative. Now, it's clearly negative if you use one of the techniques possible to you in Bollinger Bands, which is when you break above the upper band or the lower band and close above it, and then come back down into the area between the middle and the top band, you almost always go down to the middle band. And if the middle band can hold, then you have the possibility of going back up to the top band. This one did not. This one tried over a 6-week period. 5 of the weeks were right on the middle, but this killer down week was completely below it. And then after bouncing back up, it could not be sustained, and then we've come back down. Now, what that means to me is the probability is high we are going to come down to the bottom line. This bottom line is coming in right now between 43 and 4,400. That's not why I've got a target of 4,400, but this is another technical tool, totally unrelated for a hyperwave, that is telling me that is a potential target in the not too distant future. What does that mean? Intermediate term. What does that mean? A number of weeks. Okay, so that's the second one. We've got 2 negatives and we've got 1 neutral so far. So now we're going to go to the stop and reverse points. The stop and reverse points, Wells Wilder Jr. came up with it. It's just a simplistic way, a kindergarten way, a trading 101 way of visualizing when trends have the potential to change. And it is an excellent way of being stopped out of a trade that is going your way. For example, in an uptrend, particularly if you're talking hyperwave where things are really getting out of control, you want to get knocked out at some point. You don't want to have to make the decision, when is too much money too much money? And this thing will do this for you, because what it does is it accelerates down as price is going down. It's called a parabolic stop and reverse point. So it's coming down, and even though we've gone sideways for all of these weeks, it's still coming down, which means if we keep going sideways, this is going to stop you out. Well, if you entered the trade up here somewhere, then you should be very happy to be stopped out somewhere down here, even though the trade is still going in your direction. So that's just one way of using that. There's many other ways. On a much shorter time frame, you get a lot more trades. In this particular one, you've only got about 3 trades going back a year. Okay, so I'm giving that a negative. So now let's drop down and look at RSIs. You know my feelings on this because I keep saying it. Down here, I don't like a major trend that gets way overbought on the RSI, meaning 70 or above, or in this case, 80 or above on multiple occasions, that then the price breaks down and the RSI breaks down. And when you're looking for a bottom, you're saying, oh, I hope this is a bottom. Oh, I hope this is a bottom. But the RSI is just midway between overbought and oversold. I want a bottom where the RSI gets very oversold, hopefully on a capitulation with a candle like this kind of a candle, or something else. But I consider this to be neutral. I do not consider this RSI to be positive at all. And I've got a bunch of people that have been asking me questions. How can you say that? It's rising. It's back to the midpoint. It did get as low as the low 40s, and now it's up to 50. It's going in the right direction. All of that's true, but it's all meaningless. The only thing that RSI, and I've used it since Wells Wilder came up with it. He also came up with this stop and reverse, but he was the inventor of the RSI. Ever since he taught it to me in the 70s, I've used it on all kinds of asset classes over all kinds of time periods. And basically, unless you're very overbought or very oversold, it's not that useful, in my opinion. I want a trend change, and I want it to be from an extreme point. Otherwise, to me, it's just neutral. I call this one neutral. The MACD on a weekly basis is negative. Now, I've had 3 or 4 people say, how can you say this is negative? The histogram is moving up. Yeah, but the histogram is red. Just because the green is moving up doesn't mean it won't go back down, which it did here, or go back up, or go back down, or go back up, or go back down. It doesn't matter that it was going down when it was green. The price was still going up. This doesn't matter that the histogram for the last 3 weeks has gone up. You've still got a big spread between the two averages that are used in this particular MACD, and it has not crossed over yet. It could, but now you're trying to foretell the future. I'm simply using the probabilities as they stand when I make a call, as they stand at that moment, not trying to project what is going to happen tomorrow or next week or the next week, except on the basis of the probabilities of what all the TA is telling me in terms of what are my probabilities that this run was going to go up to somewhere above 9,000 because of things that were happening technically, as opposed to saying this is going all the way up to the all-time highs and beyond. You can't do that. If you do it, you're lucky. And good technical analysts won't make those kind of prognostications. You want to stay within what the evidence is showing you and wait for new evidence to come in. Okay. So I'm giving that a negative, even though others disagree with me. So net, my feeling is that we're still in a sideways channel that has been going on for 2.5 months in a downtrend, and every attempt to come out of that downtrend gets rejected somewhere between the 10,000 and 11,000 area. This time it got up to 9,700 and something. Last time it made it all the way up to over 11,000. But in that case, it was turned down. And I think in this case, it's about to be turned down again. Now, I'm not just saying that because we've had this downturn recently. I'm saying that because that's what the weight of the evidence is showing. Some people have been asking me, if I see 10,100 taken out, would I buy some? I said I'd have to look at all the indicators at that point, but that's a possibility. Probably not, because I've got another area at 11,100 that I think is even tougher, and a third one at 11,750 that I think is even tougher. So someone else then jumped ahead and they asked the right question. They said, if this somehow is able to work its way up to 12,000, in other words, through what I call the valley of death between 10,000 and about 12,000. If it does that, in other words, totally hypothetical, if it does that, would I be willing to change my view and put clients back in and recommend people get in? And my answer was yes, that I would. And it was a definite yes. I've said it before that to me, Hyperwave is saying it's going down to the phase 2 line somewhere around 4,400. But other technical systems are saying other things. And I am not so stuck or proud on the fact that I've spent 40 years working on this silly thing that I am going to exclude the evidence that comes from many, many other sources. So my explanation was, yes, at 12,000, I would definitely take a position. It wouldn't be a full position because I want to see closes above that level on weekly basis for a week or two before I put on full positions. So purely hypothetical. And then I ended my comment to him by saying, I think there's less than a 1 in 5 chance that we're going to see this go up to 12,000 before turning down and going lower. That is my views on the current situation in Bitcoin. And now we are going to turn quickly to about 10 charts.
We got it.
Excuse me?
We got him. I'm putting my headphones.
Okay, good. So you're going to screen share?
They are on screen share.
Okay, they are on screen share, so I can make this big so I can see it. Ooh. Okay, so here's what we're going to do. We're going to
have fun.
We're going to look at the 10 largest NASDAQ stocks. We're not going to draw a whole lot of lines, but I just want to get a quick visual picture to everyone of exactly what we're looking at here. Now, why the 10 biggest NASDAQ stocks? Well, we talked about that before. It's because of the way the index is figured, and the way it is figured is on a cap-weighted basis, and which means the total capitalization of the companies. So we're looking at the 10 largest capitalized companies that therefore contribute the most to the movement of the index. And most of them are doing the same thing. That's what's bothersome to a lot of people. If half of them were up and half of them were down, or half of them were way up and half of them were just slightly up, that would be one thing. But they're all way up, and we've already identified that many of them are actually in hyperwaves at various stages. I'm not going to talk hyperwave today. I just want a big picture. But here's the thing I wanted to talk about before. You're looking at Apple. Apple is the largest capitalized stock. Not only, now here's what you need to know. And many people know this, but most people do not. Apple is the largest stock in the NASDAQ, but Apple is also the largest stock in the S&P 500. Did you know that? Most people don't know that. They say, wait a second, I thought you said it was in the NASDAQ. Stocks can be on multiple indexes. Some of them are in all 3 indexes, including the Dow Jones Industrial Average. And there's a bunch of other indexes. So now here's the problem with Apple being the biggest in both. The S&P is also a cap-weighted index. So if the biggest company in both of those indexes is going vertical, that is going to influence the overall indexes. If the top 10 companies on both indexes are going vertical, the other 490 are not going to be able to slow them down. Now, that's got all kinds of investment implications for where your money is if you're in the traditional markets in the stock market. Because if you are in indexes like Wisdom Tree has that are not cap weighted, they're dividend weighted, but cap weighted indexes are flying, and the dividend weighted indexes with the same stocks in them are lagging, you are going to be underperforming the indexes. Now, for individuals, that doesn't matter. For institutions, it matters a lot. You don't want to lag your competitors or other indexes. Okay. Now, here's an interesting statistic about the S&P top 10 relative to the NASDAQ top 10. Top 10 meaning the capitalization of the biggest 10 companies in both of the indexes. 5 of the biggest stocks, of the 10 biggest stocks in the S&P, 5 of them are also in the NASDAQ. So half of the 10 biggest stocks in the S&P are in the NASDAQ. Plus the NASDAQ's got 5 other ones that are their 10 biggest. I'll just read them very quickly. These are the NASDAQ on a cap-weighted basis. And we're going to look at all 10 of these charts. Apple, Microsoft, Google, Amazon, Facebook, Intel, Cisco, Comcast, Nvidia, and Netflix. Actually, Pepsi has jumped up because some of these have come down below Pepsi, not that Pepsi's gone up. And Pepsi's actually number 8 on the list right now, but I knocked it off because Nvidia and Netflix have dropped below it. I haven't had time to look at Pepsi. Okay, those are the 10 biggest in the NASDAQ 100 and in the NASDAQ. Now, in the S&P 500, the Apple is number 1 in both of them. Microsoft is number 2 in both of them. Amazon is number 3. And Google is number 4 in both of them. Facebook is number 5. So the 5 biggest in both indexes are shared equally. Therefore, the NASDAQ can be said to be driving the S&P 500 higher. Now, it's hard to drive 500 stocks higher, but another thing people don't realize about the S&P 500 is about 400 of those stocks are very small stocks, not penny stocks, not micro cap stocks or even small cap stocks, but they're small companies. They would be considered small cap stocks, and many of them are mid cap stocks. Therefore, because they don't have big capitalizations, the very large multi-$100 billion companies, all of these that we're talking about are 100 billion or more, each one of them will knock out 20 of the smaller ones in terms of the impact it has on the index. So you get to the point where a very small number of companies is actually moving both the NASDAQ and the S&P 500. I was going to talk about the Dow Jones 30 because there's some similarities, but again, there's only 30 stocks in it, and almost nobody cares anymore about the Dow. Everybody looks at the S&P 500. Okay, why am I going through all of this for you? Well, we started talking about traditional markets about 2 months ago when we started getting this wild volatility in the NASDAQ stocks, the FANG stocks. And then we started drawing hyperwave lines, and we noticed collectively, because you all sent us a bunch of very neat charts on NASDAQ stocks that you had seen that you suspected were in hyperwaves. And we've shown you a bunch of charts. Let's just take a look at these fairly quickly. This first one is Apple, and just eyeballing it, you can see Apple's doing fine, thank you. You know, it from 2000 and what are we looking at here?
2000. We're back in 2001.
Yeah, if you take a look at around 2008 and 9, that pullback.
You want to zoom in those areas? All right,
yeah, just straight up there, right there. That's the 2007, 2008 problems. And then the next peak, you can just keep the large one. We're not going to get too detailed here. I just want people to get a, yeah, that's good. Okay, you see 4 peaks basically, right? The one before 2008-9 downturn, then the one in the 2013 period, and then the one in the 2016, 15, 16 period, and the one we're at now. And you see that the bottoms keep going higher and higher and the tops keep going higher and higher. Ladies and gentlemen, that is a bull market. And it's not anywhere close to doing anything but being in a bull market. So let's look at the second one, Microsoft.
There we go.
Or you got Netflix, Microsoft, or Netflix, either one. Okay,
yeah, Microsoft in.
Okay, here's Microsoft. This one looks different. You know, it doesn't have that same characteristic that Apple has. Apple had higher highs and higher lows on the entire chart going all the way back to the 07 bottom. And here, after the big run up and the downturn in 07, we go flat. And then we actually go lower in 2009, 2008 and 9. And then we go up back to where we were, and then we go flat again. And then all of a sudden something happens and Microsoft takes off. So to me, this is hyperwave-ish, but it's not a very clean one. What it is, it's a very strong stock that is, maybe roll this over so we can see the right-hand side a little bigger, the current situation. Great. And then maybe, yeah, just roll it bigger there. So we're talking basically in terms of in 2018, not going anywhere. Now, people say, what do you mean it's not going anywhere? Well, it's one of those sideways trading areas where you got some highs and some lows, but you can draw lines kind of across all the highs and sort of across the lows, and you're sort of going flat. So for the last 4 months, Microsoft has been struggling. And one thing, a stock that's been going up sharply for a period of time, you have to start being careful if it starts going sideways, because it's going to run into all kinds of trend lines. Maybe they're hyperwave lines, maybe they're just trend lines. But Leah, if you could just keep that chart just the way it is and just draw a trend line across the bottoms from the far left and all the way up through the bottoms.
Yeah.
Yeah, perfect. Just like that. Nope, right down where you had it.
Hold on. Still learning trading view here.
Yeah, no problem. That's one reason we want Leah to do. Yeah, right there, right there.
It's not moving.
We don't want it to touch. That's good, right there. Okay.
There we go. Sorry, guys. Still learning trading view here.
So what my point is there was an acceleration in November of last year up from that blue line, and we haven't come down to the blue line. So that's one potential hint that maybe there's something hyperwave-ish here. But forget the hyperwave side of things. Just what I'm saying is when you've been accelerating up like that, that blue line becomes very, very, very important. And if you get too far above it, you're probably going to come back and touch it. And then you've got to ask yourself, if it not only touches it, but breaks through it, what am I going to do? What is it telling me? And if you look down below at that MACD chart, you'll see one thing that happens when you go sideways for a while is the MACD turns down. And that's exactly what happened. You had the blue line crossing below the red line back in late March, early April. Now, that's not a sell signal or anything like that because it still looks good. But what I'm saying is this is very different than Apple. So now let's go to the second one on your list, Netflix. Now, Netflix, I think we all sort of agreed on. I did not come up with this. One of our followers did. And we drew some lines on it. And yeah, to me, this is much more hyperwave-ish, meaning that you can pick out just by sitting back that there's angles of ascent going on here over a long time period, you know, over 10 years. And there are some periods that are kind of flattish that you could say are kind of phase one-ish. And again, we're not going detailed here. I'm just telling you ways you can look at long-term charts and begin picking things out. But what's extraordinary now is maybe roll this one to the left like you just did on Microsoft.
Further time scale? Or?
No, bigger. Yeah, the other way. So we can look at the recent activity. Okay, yeah. Now let's draw the trend line in across the bottoms from the left up. And there's a very clear line. You can see it. You don't even need to draw it. It's just sitting there, fat, dumb, and happy. But then we accelerated up from it, which is fine, except for some other things technically that we talked about before, having to do with the potential for what is called a broadening top, which is an Edwards and McGee thing that then Wells Wilder Jr. did a lot of work on, and then a partner of mine and I did even more work on it. And we pointed out in one of our last NASDAQ vlogs that some of these things are looking like broadening tops. This one specifically is not. It's close, but it is not there, and we won't go into the details of why, but I'm going to show you a couple that are. But there's a problem developing here, which is that we accelerated up from that trend line or a hyperwave line, depending. And when you get too far above it, you're probably going to go back down to it. And if you go back down to it, you might break it. Now, in the case of if this is hyperwave-ish, you don't want to break a line after you've had several accelerating trend lines, because you run into the risk of going through a 4, 5, 6, and 7. Take a look at the MACD.
Quick broadening top.
1, 2, 3, 4, 5. Yeah, that's a good one.
Yeah.
That's a good one.
If you wanted to mention. Yep.
Yeah. Well, that's great. I'm glad you pulled that up. But we'll take a look at that when we find a real one. I think there's 2 or 3 real ones in here. But take a look at the MACD on this one. Down at the bottom, you can see what's happening. Now, where Microsoft is already crossed on its MACD, the short term coming down through the long term, this one's more dangerous to me. It hasn't crossed yet, but take a look at the last bar of Netflix. It seems to be struggling in a fairly mighty way, which is going to bring that short term moving average down fairly quickly. So the 3 biggest NASDAQ stocks, the first one looked fine. The second one is problematic. The third one's even a little more problematic in my mind. So let's go to the next one.
Tyler, just quick question for you guys in the live chat. We use bars, but if you guys are more comfortable with candlesticks, we can switch that for today. So just let us know and we can do that. And yes, Tyler, which one did you want? You said Facebook? Yeah,
let's look at Facebook.
Okay, cool.
Yeah, I use bars on long-term charts for different reasons. Okay, let's make that smaller, meaning
longer time frame.
Yeah, longer time frame.
Oh, everyone's asking for candlesticks for now. Is that okay, Ty?
No, it is not.
Okay. Sorry, guys.
Yeah, I'm just kidding. But I just wanted to take a quick look at this. Okay, yeah, Facebook's very interesting now, and a lot of people have said that. Okay, why don't you switch to candlesticks, and then let's make it shorter time frame.
Yeah. I do recommend bars at some points, guys. It's like very, very easy to read, but understood that since you guys have been following tone, yeah, candlesticks are fun.
Candles give you more information, but they're not as precise. Meaning
tiny precursor.
Meaning that on bars you can tell exactly where something closes and opens, as opposed to the width of a candle where you have to go to the middle of the wick. And when you have a lot of candles, what I do when I draw hyperwave lines is I go back and forth between the two to get it as precise as I can.
Well, and Ty, when Larry Williams and then Tom DeMark were explaining their systems, weren't they using bars?
Yeah, they were only using bars. Nobody used candles.
Candlesticks until, yeah, exactly. So, cool.
Back before the Civil War, when I was born.
Stop.
Okay, so appears to be rolling over. Take a look at the MACD on this. It's, you know, it's been in a free fall for a while. RSI was overbought and now it's coming down. It's not oversold yet. My initial indication on Facebook is out of the four we just looked at, it's in worse shape. Now, we're not doing this because I'm making recommendations on any one of these stocks. What I want you to do is get a mental picture of what the 10 biggest stocks in the NASDAQ are doing, because what we don't want to happen, if you don't want a collapse in the stock market and you don't want the possibility of a recession, is you don't want the NASDAQ to break down from a hyperwave, from a 4 to a 5. So the one way of getting a feeling for the possibilities or probabilities of that eventuality happening is breaking it down into all of its component parts and understand where the weakness or strength is coming from. So on this one, this is the weakest of all of them so far. Let's take a look at Intel.
Well, we know why Facebook's not having that much fun.
Yeah, exactly. There's always fundamental reasons for all of this stuff, but right now we're just interested in the technical side of things so we can get a picture of what's going on. Intel looks, you know, it looks good.
What time frame do you want?
This is going back. Let's make it a little
2013
longer. Let's go back to 07, 08.
Fun.
Okay, so that was the the first
07.
The first bubble. Now there's the 07 drop. You've got a good angle on the bottoms coming up between 07 and this recent acceleration. And you've got very good tops in 15, 16, and 17 that formed a triangle that we broke out of to the upside. So that's looking pretty healthy. So let's zoom in on the shorter time period and see what's been going on over here on the right.
We've definitely been talking about them a lot on the morning brief.
Yeah. So we've got 1, 2, 3, 4, 5, 6, 7, 8 weeks in a row where we couldn't break above overhead resistance. And look at all the wicks extending above all of those candles. Big seller at 52. Either big institutions or just no lack of follow through on the buyer's part. Now, that could be setting up for a break to the upside, but this is a lot better looking than Facebook, and looks perfectly healthy to me. Notice that RSI is stuck up around overbought territory and going sideways. It could do that for weeks, months, and years sometimes. Notice the MACD is pegging at about as high as it can go. So yeah, sometimes it'll cross over and then cross back and cross over, but all of that is very healthy. So I'd put Intel, you know, sort of not as strong as Apple, but better than all the rest. Let's look at Cisco real quick. Now Cisco
This is back to 2011 right now on this chart.
Okay.
Sorry, here's the candlesticks for y'all.
Yeah, let's just look up recently. It's really since 2018. Everybody knows that the first year of the Trump presidency, we had, you know, one of the most dramatic moves in the stock market we've ever had, not just in terms of total price, but just in terms of no corrections greater than 5%. Very, very unusual. But here, what we have. 1, 2.
Here's 2017. Yeah.
4, 5. Yeah. Okay. But starting in 2018, all of that changed. There's something different going on. And on a fundamental basis, people can say it's the potential of a trade war, it's the potential of this, potential of that. And all of that may very well be true. But just looking at the charts, the first thing I see here is this is a broadening top. 5, 4, 3, 2, 1. It's a very subtle one. Somebody asked me about it when I made that comment before. So I'm just going to show you a very quick way of looking at a broadening top. If you go back, Leah, to the 18th of December, approximately, there is a green candle. No.
Gotcha. Yep.
Oh, okay. If you could put a 1 above that.
Do you want me to pull up the sequential? Hold on. But we can try. Guys, again, learning curve here. I think it is like this. I'm going to embarrass myself here. Let's try it. Boom. How about 1? Boom.
Great.
Really ugly. Thanks, guys. Sorry.
Is there any way to make it bigger
Yep.
so I can put my glasses back on?
That's a good idea. Let's make it boom. No, let's make it bigger. Bada bing, bada boom.
Okay, good. There it is.
Cool.
Okay. That's considered a 1. And all it means is there is a price high higher than the candle in front of it and the candle behind it. And then the next candle over can be considered a 2. And you would put the 2 below the red bar.
All right, we're going to have some fun.
And I'll show you why this one is so hard to find, and it's very subtle, but it is there. Now, if you go up to the red, the next red candle.
Right.
Yeah. And above that, put a 3.
Broadening tops. It's going to be fun, guys. Okay. I feel like a child trying to figure this out. Okay, here we go.
And then the next red candle is a 4.
Yeah.
Now, the reason the 3 was a 3 is, again, because its high is higher than the candle to the left of it and the candle to the right of it. The reason this is a 4 is very subtle. It's true that it is lower than both of those candles, but that's not the way a broadening top works. The 1 that kicks this off, as it goes up to a 3 and then a 5 on the upside and a 2 and a 4 on the downside, the 4 must be lower than the low of 2. And look at the wick on that 4. It had dropped all the way down lower than the low of the 2 and lower than the low of the 1. That's why you can put a 4 on it. Now, the 3 is a 3 because it's higher than the 2 and the 1 and the candle following it. So now we've got to look for a 5. And there is a 5, which is also a red candle, which is the one after the green. It's the highest closing candle there. 2 over, 3 over to the right. 1 more.
Sorry.
And now you put it above it.
Okay. Whoever said in the chat that I can take off this magnet, any advice is appreciated with my ignorance on TradingView. But yes.
Great, because anybody that doesn't use TradingView can learn along with us.
Yay.
Okay, that is called a broadening top. 1, 2, 3, 4, 5. And what that is that is a reversal of a long-term trend. This is the first one that we've seen so far in this group, but we had found other ones before. And this one is a tough one to find. So people that follow this on Wall Street, many of them would not have picked it up. And it may or may not be on other time frames. But since we're looking at a weekly, now what this would mean is that you would expect a downturn. And the way Wells Wilder Jr. Plays this, and we did a lot of testing on it, is you put a stop above the 5, and it's basically in the increments of the size of the chart you're looking at. So I would put a stop up on this around 48, and we'll do a show where we explain all the differences. And that would go above the 5 candle, stop somewhere around 48 above the 5 candle. And it would be the same for 5 weeks, meaning the next candle, it would still be 48. The next candle still be 48. The next candle still be 48. And then it will begin going down by 1 increment every week, almost like a parabolic stop and reverse. And the reason for that is very often when a broadening top comes to a 5 like this one does, it will drop right off of that 5, but then it will struggle back. And what those stops do by being up above that 5 is just make sure that you're not going to get caught in a short position in this case, or out in cash when something goes the other way. And so it gives it about a 5-week period to digest what's going on before the stop begins coming down. And you will be amazed what happens at how the price will follow that stop down for weeks, months, and sometimes even years without hitting it. So I just wanted to point out that one thing. So Cisco is in a dangerous spot in my mind, not only because of what is going on with the crossover of the MACD, but after being up in overbought territory, the RSI has begun to come down and the price has begun to come down. So once again, that's just 1, 2, 3, 4, 5, 6, 7. We got 7/10
Oh man, I don't know what is happening with the situation.
We have 7/10 of the work done of getting a mental picture of what the biggest stocks in the NASDAQ are looking like. So let's go on to Comcast.
So Ty, we got a comment in the audience to try putting the Elliott impulse wave on this one. Do you want to give it a shot?
No, only because we don't have time. This is going to be fairly short, but thank you for that suggestion. We will do a complete show on the NASDAQ with various technical tools. I just want this one to be general because of what's happened the last 3 or 4 trading sessions in the stock market. We thought it looked like we were bouncing, but it turned out we didn't. So let's take a look at Comcast, then we'll do Nvidia and Nvidia.
And I will learn how to do that Elliott impulse wave by the time we do that, Jally. So thanks. All right, Ty.
Okay. So we are looking at Comcast. Comcast has really taken a pretty big drop here. And let's go back to 2007. I just want to see what the running, or even before. Let's go back a long way on this one.
You want to go further, you said?
Yeah.
Let's have some fun.
Okay, good. Okay, so
1976, Ty.
Okay, so there you've got the 2000 top, the 2007 and 8 top. You've got those lows. Then you've got, if that is a 1, 2, 3, 1, 2, 3. Well, whatever that, okay, let's take it just to 2012 to the present.
Okay.
That's where it starts getting interesting. Okay. And let's draw a trend line from the far left through the bottoms in 2015.
Sorry, say that again, Ty.
Trend line from the far left bottom through the bottoms in 2015.
You got it.
Next one over.
So apparently this is a magnet situation.
Yeah, it's drawn up there. We want to go lower though.
Yeah. 2016, sorry.
Yeah, right there.
That next bottom. Killing me.
And extend it all the way. I just want to see if that's catching it.
I need to figure out how to not have a magnet.
Okay. So what we got here is a very, very long either phase 3 that is breaking down. It could be a phase 4, but I don't think so. We might have had no, let's just call this a trend line for now. And now let's just take a look at since 2018 with that trend line in place.
You said 2018?
Yeah, just the last year.
Oh, wow. Okay.
Or 2017, just roll. Yeah, perfect. Okay, so clear break of that trend line. Now let's see if we can find a broadening top here. I don't believe I saw one. If this is a 1, if that's a 1, 2, 3, no, that's a 1, 2, 3, 1, 2, no, 5, 4, 3, 2, 1, 1, 2, 3. The problem here is the September top did not go higher than the June top. It looks to me like they were the same. Maybe if you could just put your cursor over the June top in 2017, 2 over to the left. Yeah, what's the price that shows on that as a high?
42. Around 42. There's the close.
And what about the one on the left?
Yeah, it closed
42.17. So the 18 is higher. Now take a look at the one in August that's up at that line. Yeah, that one. That's 41.99. So that is a high, that red one. So I can count that as a 1, 2.
Oh, sorry,
but that's not candlesticks. So that doesn't work. Okay, right. I don't think it's there. But what is here is even worse, which is you don't want to be breaking a 10-year trend line. I think Comcast is in trouble. So I would even say this is the weakest of the 7 or 8 we've looked at already. We've only seen 2 that look really positive, 1 neutral, and the others are leaning in a negative direction. But what's clear to me by doing this exercise, and I'm doing it live with you all, just so you get a sense of how I like to break things down. And let's just end with Nvidia. We've already done that last one, Netflix already, but let's take a look at Nvidia.
It was back to 2001.
Yeah. 2000. Yeah. So this is a, I'd like to be able to say that this is clearly a hyperwave. Why don't we roll it to begin about 2007? But it really isn't. You've got a great base across those tops, and then you go into this 2, but it really doesn't accelerate. It just is an incredibly well-performing stock. I wouldn't try to put it into a category of a hyperwave. But if we go now to 2016, let's take a look at what this trend line looks like, because it's similar to Comcast, but I don't think it's broken down. And then I also wanted to look for a broadening top here. 1, 2. Yeah, so maybe just draw from that bottom in 2016. No, that clearly is not broken that. But if you want to,
there you go.
and it does, I do not see a broadening top there. So 1, 2, 1, 2, 3, 4. Yeah, right about there, and just along the bottoms.
To present day or where?
Yeah, why don't you just extend it?
Yeah, okay.
Yeah, drop it down to the bottom of that green candle.
Yep. There you go.
Yeah, that's close. And then you can draw another one from the touch point in March up through the bottoms. March of 2017.
Got it.
That touch point over there. Start it, no, to the right where it's touching the blue line. Yeah, right there.
Understood. Okay. Until where do you want this one?
The first correction down. Yeah, right there. That's good. So that's broken down. So the accelerated whatever it is has broken down below that line, but it's still got a lot of support down at the $150 level. But that's still 25-30% lower than where it's trading right now. So that's a negative also. So I am not saying the NASDAQ is in a position that tomorrow morning it's going to break down. But an awful lot of analysts are getting antsy on Wall Street about what they're seeing with some of these bigger stocks that had been doing so well in propelling the entire market, the Dow, the S&P, the Russell, the mid cap, the large cap, growth, value, everything up on the back of just a small handful of stocks. And we've just seen that that small handful of stocks is running into some problems. They're not fatal, but you need to look ahead to prepare yourself mentally for what could be happening or could happen. Not projecting, just taking a very clear look at it the way we're trying to do with Bitcoin. And I could come up with a scenario technically in which another 5% drop in the NASDAQ, which could be a day or 2 days or 3 days, could be a very problematic move. It has not occurred. We are attempting to hold. Most of the comments I made said we've been sort of going sideways, since the beginning of this year for 3 or 4 months. But that sidewaysness is made up of big ups and big downs and big ups and big downs. In other words, increasing volatility. And increasing volatility after a long run always gets a lot of people nervous, regardless if they're technicians or fundamentalists. So we want to keep coming back and exploring that topic, at least on a weekly basis, until we get some resolution. I would think that the resolution is going to be to the upside out of this consolidation for the last 3 or 4 months. But that's a guess on my part, based on fundamentals as I see them. But I'm not going to spend a lot of client money guessing. So one thing we've done during this period of consolidation is we've raised cash, quite a bit of it, at least 15%, as much as 20%. We've made sure we've got about 15% in gold, which tends to do well when, not necessarily when the market is going down, but when people are unsure of what's going on. And it almost always goes up, gold, if the dollar is weak. and the dollar had been weak, and now that it's showing some strength, and gold has been showing some weakness. So we've got various parts of what we're doing that are trying to make it through this tough beginning of 2018. My conclusions on Bitcoin are, as I put it, I think intermediate to long term, it looks lower. My conclusions on NASDAQ, as we sit here today, is intermediate to long term look higher. And with that, I'm turning it back over to Leah. And thank you very much for doing all that hard work for me.
Everybody thanks on the learning curve there. Hey, Ty, we have a couple questions. You want to take them?
You bet.
Oh, yeah. Okay, so what indicators would show you, actually, this is one that I received from Twitter earlier today. What indicators would show you that we're about to go back into a funky hyperwave?
Well, there's only one thing that can do that now, and that is to go down to 4,400 approximately. We've already eliminated the possibility of it being a funky hyperwave off of phase 3 because it broke it and stayed below it for a long period of time. So that had the possibility of holding on and going into a funky hyperwave. It did not do it. So there's only one thing left, and that's the phase 2 line, which comes in at 4,400. If we can go down to that and hold, we could turn it around, go right back up through the old phase 3 line, which is now a trend line, go right up through 10,100, 11,100, 11,750, and that 12,000 area, get above it and go to new highs off of a phase 2 bounce, which is a definition of a funky hyperwave, because it never made it back to where most hyperwaves go, which is below phase 1, which is at $1,000.
Great. What's a good entry point for Bitcoin right now, do you believe?
$4,400 on a bounce. But I wouldn't put everything in. I would put some in at 4,400. I would also put some in at 12,000. In between, I would stay in cash. Cash looks beautiful when markets are going down. When markets are going up and I'm in cash, I love it.
Ty, and you want to explain what you mean when you say when I'm in cash?
Yeah. I would never short Bitcoin, period. For any of my clients, I don't short anything. We're only long players. But so when I say I'm in cash, there's in the world of investing, there's only 3 things: stocks, bonds, and cash. Everything else is noise. Every other asset class is noise, except for real estate, which is not an investment security or something that you can manage as an investment. Not that it isn't a great investment over a long period of time. That's not what I'm saying. I'm saying you can't put it into a portfolio and when things weaken, get out of it. It's illiquid and it takes forever and you might not find a buyer. So what I'm talking about is when you're constructing investment accounts that you can manage and do something with, there's only 3 asset classes: stocks, bonds, and cash. Yes, precious metals are an asset class, but I would prefer buying them through an ETF or prefer buying them as opposed to the physical. So I don't have to store it and I don't have to lug it around. I don't have to do all kinds of stuff. It's much easier, much simpler. But put that aside. So if you are trading something like Bitcoin or in Bitcoin, if you are a hodler, you don't care. You shouldn't be listening to any of this stuff. 10 years from now, take a look and see what you've got. You're either going to be fabulously wealthy or it turned to zero a long time ago. But you don't really care, and it doesn't. So those people that have that perspective on Bitcoin, it's not helpful to, keep jumping in on comments and saying, why are you fudding? Why are you doing this? Why? It doesn't matter to you. If you're really a hodler, it doesn't matter what anybody says or does. So please just be quiet. But when I say I'm in cash, what it means is if I'm not in an asset class like Bitcoin, it means I'm in cash. I'm in cash. I mean fiat money that sits there and slowly disappears at about 2% a year. But for a week or a month or 6 months, it's fabulous because your only choice is you're either in Bitcoin, and if you're right, it's going up and you don't want cash. But if you're wrong, it's going down, and yes, you want cash. If you rode all the way up to 20,000 and you didn't cash out at 17 or 18, you'd be lucky if you got out at 19 or 20, but you should have been able to get out anywhere between $15,000 and $18,000 fairly easily using a lot of different systems. If you did that, then you saved yourself about 50% of your money because you were in cash. Cash gave you 50% of your money. It's unbelievably valuable if it's used properly. In the stock market, when I say I have begun raising cash, what it means is I'm selling off stocks. I'm selling off positions that are beginning to look weak, and I'm keeping that in cash. Why? Because I don't want clients' assets to drop. I do not care if I lose an opportunity because I'm sitting in cash and the stock market's going up. I don't care. I did that because I don't want their principal to erode. One is called opportunity cost. When Bitcoin went up from 7,000 to 9,700, everybody that wasn't in it and was listening to either Tone Vase or myself or other people that said this does not look that good kept making comments about, don't you wish you were in it? And my answer is absolutely not. I don't care that if I had risked money on black and black came up, I would have much preferred not to have placed the bet. Even though I lost, all I lost was an opportunity. I still have all of my money. That's what you need to play this game, to be in this game. You need to hold on to your assets. And when those assets grow, you don't want them to slip back. Don't tell yourself, I started with $25,000 and now I've quadrupled it in Bitcoin up to 100,000. I'm sitting fat, and let it go back to $25,000. You just lost $75,000. Don't tell me that you started with 25 and you've got 25. You just lost $75,000. And someone that doesn't understand that is simply buying into a story that has never come true before in history. Ever. Maybe this will be the first time. And you want to put your wealth on that? Come on. Let's be reasonable.
I like it, Ty. Yeah, absolutely. And from a business perspective, that's why we have money managers and asset managers like Ty to make sure that our pension funds are safe. But also just when you utilize, a sophisticated debt equity ratio in companies, it's constantly changing to make sure that it reflects the best possible capital structure for not just your company at the time, but for the market environment and everything. And that does include liquidation at times, unless you disagree on certain things, Ty. Next question is about futures trading for Bitcoin. It's pretty open-ended, if I understand this one correctly. What are your thoughts on trading Bitcoin futures right now? And then actually a very kind of specific one about if you could explain the terms contango and backwardation.
Sure.
Sounds like salsa dancing words to me.
Well,
I'm kidding.
It happens in certain markets, but not many. The one that it happens the most in is the oil market or the gas market sometimes, diesel fuel, and like that. And all it means is that the way the futures markets work is each commodity, corn, pork bellies, potatoes, gold, silver, S&P futures, the way they all work is they have 3 or 4 month periods to maturity. And what tends to happen, it is the cash price of something. Gold is trading around $1,330 an ounce. The cash market, which means today, if you have 1 ounce of gold, you should be able to go into a bullion dealer, give it to them, get about $1,330 minus a commission, anywhere from 1% to 3%. So that's called the cash market. There's the London cash market and all kinds of spot markets. The cash market and the spot market's the same thing. What the futures market are talking about, it's what's the price going to be in the future. So they usually run like December, March, June, September, then start again in 2019. December, March, June. And at each one of those strike prices, what happens is when you buy that contract, let's say a March contract, well, let's say a June contract on the third Friday in June at the close is when that contract expires. So if you buy it today, every day between now and then, there is what's called a time premium on the price out there in June. Why? Because somebody is holding that, and then interest rate on holding it every day goes down by 1 day. So the biggest cost of the time premium is just what's the carrying cost of somebody lending you that money on margin between now and next June. Sometimes that reverses, and the far out months, June or September or December, actually are lower than the 3 months before them and lower than the 3 months before them, which is called contango or backwardation. It just means that the price, for some reason, the investors have forced that price lower than other prices. Now, there's usually a very good supply-demand reason for that, particularly in the oil market. But in others, it's rarer. Sometimes in the agricultural markets, corn, wheat, soybean oil, or in the livestock market, because of weather conditions, feed stocks.
Orange juice futures.
What's that?
Orange juice futures.
Yeah, orange juice is a great example. All you need is a hurricane down in Florida, and orange futures go through the roof. Limit up, limit up, limit up, limit up, day after day after day. You can't get out of your short positions. You're locked in until you lose your house and your husband or wife and everything else. Happens all the time. That's a different thing. Okay, let's go to the big question of futures for Bitcoin. It's too new to tell anything about all of those sort of things. And the volume is not very big, but in my opinion, it will be. I love the futures markets. I love the commodity markets. They are very, very dangerous if you don't know what you're doing. And if you do know what you're doing, they are very, very dangerous. And they're dangerous for a lot of technical reasons. But you can be in those markets and reduce that danger down close to zero. And the way you do that is you put up all the money that is required. You don't borrow on margin. You don't leverage. For example, gold is a 100-ounce contract. 100 ounces of gold at current rates of $1,300, let's just round it off and call it $1,300 an ounce, is $1,300, $13,000, $130,000. So 100-ounce bar is $130,000. Now, you can buy that, the last I looked, for less than $10,000. So you put up $10,000 and you own $130,000 worth of gold. If gold goes from $100 or $1,300 back up to where it was not long ago, $1,360, you make $60 times 100, which means you make $6,000, and you put $10,000 up. You just made 60% on your money, and with a little wiggle in the price of gold. And you did it in a couple of days or a week. Well, the opposite of that is also true. If it had dropped $60, you would have lost $6,000. You would have lost 60% of your money. And you would have to come up with more money because you don't have enough money now to hold that contract. If you don't, they sell you out. You're forced to take the loss. That happens in Bitcoin, on BitMEX, and other places if you're leveraged. But just say you had $130,000 laying around and you use the futures exchange, and instead of just paying the minimum margin, you put $130,000 up. Now you've just totally erased everything I just described. On the same instance, you would make $6,000 if it went up $60 on your $130,000, which is an okay return. But you haven't gotten blown out. And the same thing on the downside. If it drops $6,000, you've got a minor loss on $130,000. Anywhere in between those two extremes, you can do whatever you want. You know, don't put a whole 130,000 up, put half of it and only be leveraged 2 to 1 or 3 to 1 or 4 to 1. There were times that I was dealing with some very, very, very large clients that were trading T-bill futures that were $1 million face value, but you could leverage it 100 to 1, and they were playing with billions of dollars.
T-bills?
Yeah,
not
treasury
T-bonds?
No, treasury bill futures.
Yeah. Wow, that's crazy play.
So the size of the moves can be enormous, even with little tiny moves in interest rates. Wow. So what I'm saying is, there are all kinds of rules and restrictions. You've got to learn what they are. I would not jump in and have a broker tell you, why don't you try this, or why don't you try that? We will do, if enough people are interested, we'll be glad to spend a couple of vlogs and go into the details of the intricacies of trading futures and what limit moves mean, and how you can get stuck in a position and can't do a thing about it, can't get out of it, and how they can change the rules like they did against the Hunt brothers in the silver experience, and drove the price down and bankrupted them, basically. A lot of things can happen. Be glad to explain it, but I think that's enough for now.
All right, everybody, you've been with us for an hour, so thank you so much. And also, on my learning curve with TradingView, I swear I'm going to get better, but it's not a software that Tyler and I have been using for too long. Yeah, and just, you know, a last comment on that, on the morning brief, you know, with OKEX and a lot that's been happening. I think that actually we should, Ty, talk more about the futures market and what's going on, especially in relation to all these exchanges for Bitcoin that I think are not great places to play around with, but also, you know, the latest with CBOE, CME, but I think that's for another day. Yeah, everybody, thank you so much, and have a great day. Ty?
Great, thank you very much.
All right, bye. And buy hot sauce, it's really delicious. Okay, bye.